Although it's still impossible to forecast, Tesla's future holds enormous promise. Investors in TSLA should be realistic in their expectations and take into account any hazards that Tesla may encounter in the next 5 to 10 years. Stay tuned on to find out. Before we move ahead, please note this video is not a financial advice. In today's video, we're going to talk about what former CEO Tesla exposed why Tesla is not a good investment. But before we get into it, subscribe to our channel and hit the bell icon to never miss a video from us. That said, now come, let's take a look. Tesla Motors Inc. or TSLA is one of the most intriguing public firms in the world. It is regarded by many as a high-risk, high-reward company. Tesla's founder, Elon Musk, is a contentious technology sector superstar, and the company's Silicon Valley roots have raised investor hopes. The company's achievement of a $1 trillion market cap in 2021, a lofty figure only a select few mega-titans had attained, helped Tesla garner even more attention. Potential buyers of Tesla's Model S are still confronted with a high price tag that starts at $94,990 before any incentives or rebates as of November 2021. Despite considerable government incentives, including tax cuts for alternative technologies, even Tesla's new, more affordable Model 3 costs $43,990 as of May 2021 before tax breaks and gas savings, which is still out of reach for the majority of drivers. The expense of producing the automobiles is high for Tesla as well as for people who buy them. According to Vertical Group analyst Gordon Johnson, the firm lost almost $14,000 on each Model 3 vehicle it sold in 2018, albeit these numbers might change as the business grows. Lack of batteries to power their goods was one of the early issues Tesla executives faced. The company's battery dilemma is meant to be resolved by Tesla's famed Gigafactory, which is still being built in Sparks, Nevada. With a planned area of more than 1.9 million square feet, the lithium-ion manufacturing facility aims to ramp up output to more than 500,000 Tesla vehicles yearly. It is unknown if the Gigafactory will be finished on schedule, as logistical or regulatory challenges frequently impede large projects like this. The Gigafactory has received approval from the Nevada government and is anticipated to generate an extra $100 billion in economic activity over the ensuing decades. Even though the plant is still under construction, Musk has said that the firm may require more than one Gigafactory to fulfill demand. To keep the business humming along and the stockholders satisfied, an enormous amount of capital expenditures or CapEx will be required. Tesla suffered a little as gas prices fell in 2014 and 2015. Since gas costs are falling, gasoline-powered automobiles are becoming more appealing from an economic standpoint than Tesla's offerings. The price of gas just has to be low enough to keep older vehicles on the road. It need not stay at decade-low levels. The gas problem facing TSLA is multifaceted. The first issue is rising global oil output, which appears to disprove the once dominant peak oil idea. From 2009 to 2019, global oil production grew annually. With the aid of horizontal drilling and hydraulic fracturing, oil firms are becoming more proficient at both oil discovery and oil extraction. Internal combustion engines are becoming more fuel efficient at the same time as petroleum resources are growing. The average fuel economy of light-duty passenger automobiles in the United States is continuing to rise, according to the Bureau of Transportation Statistics. Tesla has to sell a lot more cars if it wants to become a well-known automaker and maintain a steady revenue flow. If petroleum-based fuels continue to be much less expensive, consumers will be less inclined to switch to electric vehicles. Tesla wasn't the first business to produce electric vehicles. Even though Thomas Davenport likely invented the first electric cars as early as 1834, Tesla has so far appeared to be the most successful. Due to their high sticker costs and short driving range, two noteworthy rivals, the Nissan Leaf and the Chevrolet Bolt, struggled to gain momentum in the beginning. As of October 2021, the Nissan Leaf has a starting price of $27,400 before incentives and a range of up to 226 miles. With a starting price of $31,000 before incentives and a range of 259 miles, the Chevrolet Bolt 2022 model has a greater range than Tesla's basic Model 3 as of October 2021. In the coming years, other manufacturers including Mercedes-Benz, Volkswagen, Subaru, Ford, and BMW intend to enter the electric vehicle industry. If this occurs, Tesla's market share may begin to become competitive. Some tech firms may also enter the contest. Google has also staked its future in the car sector, and Apple Inc. thinks it can compete with Tesla in the transportation sector. Tesla reportedly worries about companies with larger current customer base
And if you enjoyed watching it, make sure to like, share and subscribe to our channel for more exciting content. See you in the next video.